Well, thank you all. Yeah, like Tyler was saying, the heat suits are here, or as Cody called us earlier this morning, the heat cucks. I'm personally proud to wear that label. We'll see what these other guys think. I told them, I was like, I don't wear a suit jacket because I'm a sellout. I just respect myself, you know. So. But no, this will be a great talk. I'm really excited to get into it. We got a lot of brain power on here. Let's just start with some brief introductions here. Bart, why don't you kick us off?
Sure. Hey, everybody. I'm Bart Lorang. I'm with Meritage. Meritage is we've been an early stage venture capitalist since 1981 here in Colorado. So we were early investors in cable, cellular, satellite, internet, data centers, right? And now Bitcoin infrastructure. So I've been a startup operator, swapped my t-shirt and hoodie at some point for a sweater vest, and working on an awesome building project in Lyons.
Testing, there we go. Thank you. My name's Drzyzga. I'm a commercial real estate broker with Voit Real Estate Services. My fiat job is doing leasing and sales on office and industrial warehouses. And my Bitcoin gig, if you will, is advising property owners, investors, family offices, forward-looking operators on integrating Bitcoin practices into their real estate assets. So that's from a balance sheet perspective as well as an operational perspective.
I'm Greg Ranz with Revolution Mortgage. We're a traditional mortgage lender. We do have some Bitcoin programs that are new of this year, so really exciting. Been in Bitcoin since 2018 and a bad pleb miner in a residential capacity.
Thanks again for the panel. Thanks, everybody. My name is Daniel Kahn. I own and operate Crofters Green. I'm a vacation rental / resort in Vermont in a ski town, Jay Peak, if you've ever been there. I got into Bitcoin after having our first kid back in 2020, peak COVID, and that's really when I dove down the rabbit hole, sound money, how the kid's gonna survive in the future and all that. And then dove into the Bitcoin mining rabbit hole thanks to Bob at HBIM. HIBM, Bob Paul, awesome guy. And then pretty quickly, I just tried to figure out how can I do as much as I can to mine Bitcoin, how can I integrate it into my business, and then where I'm at now is also how can I integrate it into my community, both to orange pill people, but also get people hashing and taking advantage of the benefits of hash rate heating.
Yeah, that's awesome. And I'm Wyatt. I'm the founder of Basilic Financial. We're a Bitcoin-focused wealth management firm. We're doing some stuff on digital credit. Also got Bitcoin for Financial Services Media and the author of the Bitcoinization of Finance. And I say all that because I'm a bit of adopted Heatpunk. I'm a Heatpunk by association, working down the hall from Tyler and Dylan. And I actually do think it's one of the most important movements in Bitcoin right now. I think it's become pretty clear to me and a lot of other folks in the industry with all these big, massive public Bitcoin miners like moving to HPC, and I think the mega mine business model will be kind of extinct before we know it. And so it's very important that we're integrating Bitcoin mining into these alternate use cases. And I think what we're going to be really getting into today is really kind of understanding how to mechanically do that. And Bitcoiners get all hot and bothered when I tell them, it's like, well, we need the finance industry to achieve hyper-Bitcoinization. This is about getting dollars into Bitcoin. And we need to adopt the appropriate financial infrastructure to do that. And these folks are specifically doing that on the real estate asset class. And we need to Trojan horse every asset class we encounter. And so I kind of just want to get started here for funsies. Quick yes or no question. If our heating systems are producing revenue, are we dealing with financial infrastructure? Bart?
Yes or no, you said?
Yeah.
I'm not going to answer it that way. I mean, I think you're dealing with energy infrastructure. Money is simply stored economic energy, and heat is obviously energy. So that you're dealing with energy infrastructure.
This is being recorded, but it's not live stream, so be honest. And if you don't want us to publish it, we won't. Just putting that out there.
That was honest.
I'm gonna follow Bart. I mean, I thought that's a great angle because I don't think it's necessarily financial infrastructure. It's more on the energy side, and people don't realize how energy hungry a lot of these commercial assets are, regardless of the type of property they are: apartments, manufacturing facilities, office buildings, retail centers. Energy consumption is about 30% of their operating expenses. And that energy growth is, I mean, it's at least the last 5-6 years has been growing double digits when you have 3 to 4% rent increases. So from an operator, investor perspective, you have to do absolutely everything you can. You have to think outside the box. You have to be creative to stay competitive and efficient, and that's where the Bitcoin mining comes into, you know, the mechanical systems and, you know, the conversation that we're all here for today. So it's more of the energy infrastructure piece. So
Yeah, I agree with that. I think it's a big no. Is the stamped seed plate buried in my backyard financial infrastructure on my property? Yeah, I'm gonna go with no.
Great answers. It's heat and electricity to utility. That's, I think, where my head is at with my business, with my home. I think you need to heat your house. You consume electricity. There's a financial component to it, but that's really where my focus is and how I like to approach it.
I legitimately was expecting everybody to say yes. So, that being
It's the
said,
suit.
To level set here, Bart, I want you to kind of help us get a baseline here for understanding real estate math, real estate finance. You know, typically real estate projects are valued off of NOI, cap rates. You know, when we integrate Bitcoin into these projects, how does it change those dynamics?
Okay, so first, I guess a quick background. Up in Lyons, Colorado, which is about an hour north of here, okay, in December of 2022, just a couple weeks before Christmas, a gentleman over there by the name of Paul Tamburello, he's in the white, raise your hand, Paul, say hello, whatever. So Paul, for those Denverites, he owns Little Man Ice Cream, he runs the buildings of Linger and Root Down and Low High Marketplace, sort of a legend in the Denver real estate community. He actually did a 1031 exchange on a building, and then I think it was like 2 days later, the building burned down, right? All these beautiful businesses, so think about artists with just precious art, and the retailers with the inventory, and it was right in the heart of downtown Lyons, this 2,000-person town. And just this hole in the town. And so over time, looking at rebuilding the thing, the cost was astronomical. I think it was a sub-$1 million purchase, and it was a $3 million, then a $4 million, now a $5 million build to build it back. And so as my wife and I got to know Paul, we looked at it and said, we got to do something, right? We got to do something. And so we decided to actually build the building back better, right? But use Bitcoin to make sure it was financially feasible, right? And so we're actually incorporating, we believe it's the world's first new build with Bitcoin heating built in, all right? So completely renewable energy, solar. We've been working with Tyler and Dylan at Exergy on the infrastructure, and touring a lot of Paul's guys and engineers through the Bitcoin infrastructure. But that's actually what we're doing. And when we were looking really, really hard at the numbers, it frankly was like not particularly investable. I mean, we were seeing 2, maybe 3% cash-on-cash yields. It's like, okay, why don't we just put our money in U.S. Treasuries? And so with this component, we were able to grind it up to like 6, 7% yield conservatively with 15% IRR long-term. The headline number here is that the Bitcoin we mine will pay for the construction of the building in 15 years' time, right? That's phenomenal. That has the ability to underwrite the economics of new builds like this. And so that's been a journey because you have to explain this to traditional lenders. So we've increased our net operating income with the Bitcoin mining, okay? And therefore, we've increased the valuation of the property, both short-term and long-term, right? And made the economics work.
Yeah, that's a beautiful story, Bart, and it's really honorable what you guys are doing in Lyons. They're a small town, and Chris, you work with a lot of institutional capital allocators, family office. Have you been seeing kind of a similar story on how, Bitcoin can actually increase the valuation of these properties? Are they considering anything different kind of on the risk management side of their overall real estate portfolio?
Yes is the short answer. It's happening, but very slowly. And I think a reoccurring theme the last day and a half has been the education gap. That is consistent in my world as well. So the operators and investors that I'm working with and having these discussions, they are either they built their wealth in real estate or they have a good percentage of their wealth in the asset class where they come to me, they're already orange pilled. They say, hey, I own real estate. I'm also a Bitcoiner. I see where the puck is going. How the heck do we navigate this? Right, and that's kind of born, what I've been doing the last 8-10 months or so is helping them understand and figure out what their options are as far as kind of Bitcoinizing their property or their portfolio. And that's not just, it's from a treasury management, cash management standpoint, it's from a loan standpoint, it's Bitcoin mining into the mechanical systems infrastructure, landlord-tenant rent payments. It's really cool because Bitcoin gets woven through all these different categories. When you start to put pen to paper and you model this thing out, the numbers speak for themselves. That's the good thing. So it's going to take some time, but you get to a point 2, 3, 5 years from now, and you can say, hey, here's the financial performance of the property from 2015 to 2020. Here's the financial performance of the property on a Bitcoin standard from 25 to 2030. Game over. So, I mean, you just look at all the things that we know in here, the high-level macro trends that are taking place, whether it's the long-term debt cycle, concluding the demographic trends, AI, automation, consumer expectations, all of that, pick one, and then you apply that to your local real estate property, it's fundamentally incompatible, like full stop. Like you're not a couple basis points off, like you're miles off, right? Multiple hundreds of basis points. So the forward-looking operator is saying, hey, this Bitcoin thing can't be diluted, it appreciates, it's not necessarily a competitor to my real estate portfolio, but it's a new tool that complements and enhances the real estate asset.
Totally, totally. When you're bringing up these conversations of optimizing their portfolio, are they kind of skeptical, a little hesitant at first, and it really kind of takes you modeling out the asset class where they're more receptive to you taking on these opportunities?
Yeah, absolutely. I mean, it's a little bit of both. I've been chatting with some of the guys here. I'm like, I'm not in the business of orange pilling. There's a lot of really articulate, great resources and thought leaders out there that are way better at that than I am. The folks that I'm working with, they're already down the rabbit hole. They get it to some extent. They may not be as technically inclined as a lot of folks in this room, but they get the broader picture. They see where the puck is going.
Right on, and you guys heard it there first. If you have questions about Bitcoin, don't talk to Chris. He's not interested. But Daniel, you're a business owner. You've painstakingly integrated Bitcoin in your business, in your physical real estate footprint. How have those numbers kind of penned out? Do you feel like you could talk to an investor, talk to a lender, and kind of show the story of what you've been able to do in your local community, in your local business, and how Bitcoin has really kind of impacted it?
I could. I don't think the numbers are particularly compelling by virtue of how I've approached it. To sell my wife on it, I very much said, we'll just heat it and when we need to heat and yada yada. And then as soon as I was able to get these system lives, like burn baby burn, hash as much as I can. So in that regard, I think I overshot that mark. If a bank were to look at it, they'd be like, this guy's crazy. But my objective has always been to try to get as many of these different products running at my business, and then figuring out different applications for other people, just like anyone sitting here, anyone who wants to heat their own home, or small businesses as well. I was just talking with Nicholas from Constellation Heat. Hey, Nicholas. He has a great immersion system, and that's what we use. We installed that last fall. I have 4 miners, 2 of his heaters running at all of our cottages. And one of the things we were looking to do over the next 12 months is determine how much time it spends heating my cottages versus how much I'm donating to the Earth's warming. And then it's that sort of data that I think would be helpful. So if someone is looking sheer brass tacks, I would be able to say in northern Vermont with our winters, this is what the heating profile looks like, and this is what Bitcoin can do. I'm very fortunate that I was able to just kind of dive into some of these projects and go deep, but that's where my business sits right now.
Yeah, no, that's awesome, man, and tip of the cap to you. And just out of curiosity, have you been kind of able to kind of like market that your vacation cottages are heated with Bitcoin?
So yes, I have started that. I open it up for Bitcoin. People can book both weddings in the summertime. Our business in the summer are weddings. We host 150 people weddings in our post and beam barn. Crofters Green is the name of the business. You can check out all the pictures there. In the last 6 months, I've gotten 7 people try to pay with Bitcoin through our website, 6 of which said they didn't actually want to do it. They just saw the 10% discount I gave and were hoping to take advantage of it. But I will say 2 weeks ago, we got our first purchase, and my wife intercepted, said, "You got it, congratulations." And the booker was like, "No, this is my husband. Your husband can talk to my husband," and we were both very excited to do it. So.
Congrats, man. And Greg, you're a lender. We heard some discussion on the last panel about when we're talking to large institutional bodies, we maybe have to pair a couple offerings. I know you guys at Revolution Mortgage have been doing a lot of work at looking at bundling hash rate heating with different kind of solar loans. Could you kind of walk us through on what kind of available lending we have in the industry and what kind of appetite there is for it?
Yeah, so we're obviously a traditional lender, and we came to the Bitcoin Financial Services Summit without any Bitcoin program, and really wanted to educate people on tapping into the existing equity that you have in real estate and using that to add solar, to just smash buy Bitcoin, to do a cash out refi and put in something like what Tyler and Dylan are doing. Since then, we now have an asset utilization model with Bitcoin where you can use that towards income qualification. We've been trying to work with Hoper, which is Colorado specific, where they have 3.5% grants to add solar to an existing property through a refinance. Bundling that up with something that Zenergy is doing is a great offering, and I love the term rebate that's come out of this conference that I'll be using to talk with all the inspectors, the electricians, the plumbers, and the real estate agents that we partner with and work with all the time. So exciting stuff, and it's going to be awesome. It's come so far in a short amount of time.
Yeah, block by block, folks. We'll get there, but
Can I add to that
please.
real quick? Yeah. Your comment on the rebate is critical. I joke that I'm not in the business of orange pilling, but where most of my orange pilling has been successful is when you meet the property owner where they're at, right? Talking their vernacular, talking their language, and addressing usually a problem that they have. The easiest one is always, are your expenses increasing faster than your rents? Right? That's the answer for everyone is yes. So that's kind of an ace in a hole. And you get their attention, something that they're dealing with, they're trying to solve, optimize for, and that opens the door for the discussion, and you kind of, someone said a Trojan horse it or, backdoor it with, Bitcoin as the solution. By the time you get to Bitcoin as the solution, you already have their attention. And they're a lot more open to that discussion. But tell me more, right? So meeting them where they're at if you're trying to orange pill some business owner or investor or real estate operator.
Absolutely, and it's a great point, and I would like to just kind of double click on that a little bit because a very common sales tactic is you identify somebody's problem and you offer them a solution. I think where Bitcoin struggles is there's too many engineers in Bitcoin and they don't understand sales and they're just like try to just force something down your throat. But that's funny. And Daniel, you guys have integrated a lot of solar, into your guys' property. I'm interested, has that really kind of changed the economics of what you guys been able to produce on the hash rate heating front?
Yeah, very much so. The economics of Bitcoin mining in Vermont aren't great. We have 23-cent kilowatt hour, so God bless Vermont. But with my business, we have about 42 kilowatt array that helps offset. So my net price on electricity for the miners for the last 6 months is about 5 cents a kilowatt. So a little more reasonable there. Something that, as far as I know right now, is relatively unique to Vermont, but I encourage everybody to look at, is the used solar panel market. In Vermont, I can get 6.5 kilowatts of panels, so that's 24 panels on a pallet for $300 US. That are, and again, they're used by a commercial installer that has commercial clients. And what I've found is that every 6 to 8 years, these businesses want to recycle the panels that they have up. They don't want the 365 watt monofacials if you can have a 550 watt bifacial, and then they also want to depreciate this massive array. So once the older array is fully depreciated, they install the new ones, and then the installer who removes them is then just liquidating the inventory. As far as I'm concerned, 6.5 kilowatts for $300 is free. And I live in Vermont where we don't have a lot of sun, we have a lot of snow. Like, nothing about Vermont makes sense for solar except we have free panels, and I think that really is a nice unlock. It's a great unlock as well, just because if you can start to think about resilience in heating, right? Instead of relying on the utilities, on the grid, instead of relying on propane or nat gas, having a solar array and a battery, as batteries come down in price, still the largest input cost that I've found. That's kind of been a great opportunity in Vermont that I would encourage everybody to look at in your own states, wherever you guys are based.
Good things. Bitcoin's a battery. Okay, I was seeing if we have any takers on that, but Bart, no, I'm really curious in your guys' project, getting a big building off the ground in a small town with an innovative capital stack, and you have a lot of experience with capital formation. So just kind of walk us through. Traditionally you have your equity and your debt, and you guys adding Bitcoin to it. What's been the reception from potential investors? What have you guys kind of had to integrate or innovate on in the back end to get this deal across the finish line?
Yeah, so I would say that we're sort of finalizing terms right now. We're in negotiations with 3 different financial partners on the lending side, right? So we basically have high-level terms and detailed terms in some cases. But I think it's been very important to be very upfront early on about the use of the word Bitcoin, right? So one particular lender, like last summer, I said, hey, is this going to completely disqualify us at all? And he's like, no, actually, I've done some deals with some data centers, things like that. I say, okay. But then making sure that you're upfront about how you're going to use it, hold it, store it. So we've had to carve out in the terms like, hey, you're a bank, you don't custody Bitcoin, right? Even though, Citibank announced, I think 2 days ago, they're going to start custodying Bitcoin. Like, okay, how are you going to handle that? Everything. I think it's really, really important to get that conversation done early. And so then walking them through the income production in the financial models of Bitcoin, what assumptions are being made in terms of network difficulty, growth, as well as Bitcoin price, which obviously is volatile. So we have a couple different models in our model around using the power law, right? And so saying variance to the power law, and modeling that out over the long haul. And through that process, at the end of the day, the bank is going to care about the DSCR ratio, right? Is it 1.2? Is it 1.3? Is it 1.4? Showing that you can cover that, and how Bitcoin is, just additional goodness on top of that, I think has been critical. And then the LTV component, what we've actually found is they actually do care about the value of the Bitcoin in the long-term assets. So they'll have claims to the Bitcoin long-term, and that's actually helped the LTV discussion over time. So, so they actually have UCC filing rights on that property, both the miners and the Bitcoin, which is treated as property. So, you basically have your standard equity, then you have your debt, and then we have the ability in our operating model to dial up or dial down the Bitcoin mining depending upon the weather as well as the market conditions, right? So, for example, we might stack more if the market is good for Bitcoin miners, and we might dial up the Bitcoin mining when the weather is cold, right, or sunny, right? And so we have all those sort of different knobs we can use when talking to the financial folks on the other side.
Yeah, I think it's just really brilliant when you can get intentional about how you're financially structuring a project or a transaction like that, and some of the native properties of Bitcoin, allow it to be pristine, collateral. And so when you just educate a financial institution and dual collateralize an asset, what's been their reception to that?
It's actually been surprisingly open, less resistant than I thought it was going to be. I think, I'll just name the folks at Battery Finance are obviously sort of native Bitcoin lenders, so they're sort of coming with terms initially, and I just got them like yesterday, that are like lower interest rates than traditional banks. But it's also because they want to see more Bitcoin posted up front as essentially quasi-equity, right? So that's a different conversation, but it's actually hasn't been as difficult as I thought it would be in terms of getting it by credit committees and approvals.
That's great news.
Yeah, I think the regulatory environment and the sort of the Clarity Act and everything else, all that noise in Washington is actually helping the conversation in terms of actually like, hey, we got to be open-minded with this. All the big banks are doing this, right? We got to talk about it.
Totally. And Chris, why don't you piggyback on that a little bit, because I think it's super fascinating what you guys are doing with like some new metrics, Satoshis per square foot, and I think all of these things ultimately help get deals done and helps all the stakeholders, at play feel, comfortable with doing a deal. And you put a lot of thought in this, so why don't you wow us?
Just real quick, the dual collateralization is the good thing is that's nothing new for real estate investors. I mean, that's kind of table stakes in the industry. What's novel is using Bitcoin as the secondary layer of collateral. So you're swapping out that personal guarantee, that UCC filing, that basket of securities, and using Bitcoin instead. So you can find a Bitcoin-friendly lender. It's a much easier conversation than you would think. So if you would ask me that question, or we would have been talking about this 6-8 months ago, I would have said that the majority of real estate investors are onboarded to Bitcoin through like a treasury strategy, allocating percentage of your free cash flow to Bitcoin. Today, in what are we, end of February 2026, I think it's going to be through the lending component, just because operators are they keep kicking the can down the road with all these refis, and that comes to an end at some point. And with all the different announcements and providers out in the marketplace now, you're going to go sit down with your lender, your banker, and they're going to say, hey, here's 4 or 5 options to refinance the asset. One of them's going to stand out because it's superior terms. What's that? Path of least resistance. They don't have to be orange pilled, right? At that point, that's just click, set it, forget it. Shifting gears, so some of the investors that I'm working with that we're stacking sats, buying spot on a regular basis, just DCAing into the asset and establishing a position. We're loving this dip right now, so that's good. But what we've been doing is we've been developing new metrics to basically track the performance of the asset, to be able to explain it to lenders and other investors, and also selfishly as an internal measurement, right? If you're able to standardize Satoshis per square foot across a portfolio of a dozen properties, you can tell really quickly which ones are converting excess energy into sound money the best, right? And now when you start getting into a scenario where you're talking about acquisition and disposition strategies, you can kind of identify some of those candidates that are more likely for disposition faster. What we're starting to do as well is saying, okay, if a property has increasing Satoshis per square foot versus constant or even declining, what's going on here, right? If we're increasing sats per square foot, we're doing something right from a balance sheet perspective, from an operational perspective, you know, lower vacancies, less downtime, we're increasing rents, that operating expense line is getting reduced, what have you. If it's constant, you're probably allocating your free cash flow to something else that's going on the asset. If it's declining, we need to look into it further, right? Is there some prolonged vacancies? There's some deferred maintenance, increased expenses in some area. So that's the one we're really kind of leaning into right now is sats per foot. Bart mentioned your debt service coverage ratio. That's kind of the next one on the chopping block, just because that resonates so well with the lender community. So we're just getting started on that front. Return on equity, that's another one. So you'll have to have me back next year, and I'll give you, some additional updates.
I will do my best. I'm always in their ear, Tyler and Dylan's, that is. But Greg, let's get your comments and thoughts on what Chris was just saying regarding the lending industry.
Yeah, I mean, I think it's changing, right? We've got an administration that is pushing Fannie and Freddie to treat Bitcoin as the asset that it is. So, I've had experience where I was doing a tax statement, cash out refi, where a guy had been selling Bitcoin and putting it on his taxes for 2 straight years, about $5,000 a month, living off that and Social Security. Try to do a cash out refi and claim that as capital gains income, because why not? It's on your taxes and it's all disclosed. But Fannie and Freddie don't allow the sale of Bitcoin or crypto or anything to be used towards capital gains. So we had to come up with an alternative method, but it's those sort of problems that I'm hopeful Fannie and Freddie will have fixed very soon. With this non-QM product that we're offering, we're opening up the market for Bitcoiners who don't have traditional income streams. We're talking with title companies about how do real estate agents get compensated for their commission in Bitcoin? How do you do a Bitcoin to Bitcoin buyer and seller transaction while paying the title company in fiat? Well, maybe the title company should start accepting Bitcoin long term, right? These are the sort of questions that, now that I'm in this industry, I'm able to ask, right? And with the heat reuse rebate, it's just opening the door to more conversations to get people interested. So it's going to be a fun year.
Retweet. With our closing minutes here, gentlemen, I kind of just want to go down the line, try to make as big a impact on the burgeoning Heatpunk industry as we can. But if there is a data set that Heatpunks could produce that you could put in front of capital allocators or developers to tell a narrative, to get a deal across the finish line, what do you think is most impactful for you? And we'll start here with you, Daniel.
Thanks, Wyatt. I guess for me is just having an idea of how you can offset your costs at your business or your home, but getting a good idea of what your costs are, what it does cost to heat your home, heat your water, whatever other heat needs you have, and figuring out how that does offset through Bitcoin. So if you're not going to go nuts like me and try to hash 100% of the time, being able to make the case why using Bitcoin mining through the winter months, for example, might be an improvement off of your other heat sources.
Yeah, I think the rebate topic has come up a bunch of times, and we do this with refinances where we'll quote someone on a refinance on a property, and we give them information as to how quickly the reduction in their monthly payment will offset the cost of doing that refinance. So if we can have something similar from a Heatpunk perspective, put this system in your home to heat your pool or whatever, compare that with the value of what a traditional system would cost to run and operate, and then give them that timeline of, in 2 years, you're going to just be making money hand over fist, right, by running this unique new system. I think that's going to go a long way in making it connect from a rebate perspective and from an investment perspective.
The commercial real estate crowd, they want to know 3 things, right? What's the benefit? how much is it gonna cost, how much time is it gonna take? So if you're talking to an apartment owner, a warehouse owner, whatever the food group may be, being able to just give them those three points very quickly and easily, that's something that someone like myself on the front end, the client-facing piece of that of this chain would help tremendously. So that's my.
Let's get those three again, Chris.
What's the benefit? How much is it going to cost? How much time is it going to take?
Yeah, and dovetailing on that, I mean, all of real estate, from my vantage point, outsider's view, is denominated in square feet, right? Construction cost per square feet, right? Rent per square feet. So it's like, at the end of the day, we've gotten to the point where it's like, hey, this is going to be about a $4 to $6 per square foot per year benefit, right? And like, that's an easy statement that every real estate person understands. And I'm like, oh, so I get $4 to $6 a year in more rent? Yeah, okay. Now we can have a conversation, and that's interesting. We don't have to talk about Bitcoin at all. We just say, is that interesting? Do you want that extra rent? And so I think showing and if you think about heating, it's per square foot too. So we can boil it down to a simple real estate oriented metric that shows that across geographies, across types of buildings, and I think that will unlock a lot.
Every real estate owner, they know, to your point, my expenses for this property are $25 a foot, right? And then Bart comes in and says, well, I'm gonna give you an extra $6. They did that basic subtraction or in their head, they're like, I'm in, where do I sign? So yeah, the real estate metrics are critical.
Fantastic. Well, gentlemen, thank you so much for your contributions to the industry. Let's give them a big round of applause.